In a staggering display of institutional confidence, over $1 billion flowed into Ethereum ETFs on Monday, marking a historic moment for cryptocurrency. This unprecedented inflow could reshape the crypto landscape as we know it. Here's everything you need to know. Looking ahead, the continuation of this inflow trend could see Ethereum testing the $1,900 mark in the coming days. This potential surge is not merely speculative. It reflects a broader institutional interest in digital assets that has been gaining momentum over the past year. Notably, BitMine's anticipated expansion of its holdings to 5.67 million ETH represents a significant commitment that could further solidify Ethereum's position in the cryptocurrency market. Institutional investors are increasingly recognizing Ethereum's utility beyond just a digital currency. Its smart contract capabilities have paved the way for decentralized finance, DeFi applications, and non-fungible tokens, NFTs, which have captivated both retail and institutional interest alike. However, potential risks also loom on the horizon. The rise in perpetuals volume may lead to squeeze risks due to high open interest, which can create volatility in the market. Fortunately, current trends in orderly liquidations suggest that the market is managing leverage effectively, thereby reducing the likelihood of a catastrophic crash. Furthermore, investors should closely monitor Ethereum ETF flows and funding rates, as these indicators will provide valuable insights into prevailing market sentiment. Regulatory developments in both the United States and Europe will also play a pivotal role in shaping institutional momentum. As governments grapple with how to regulate this rapidly evolving space, clarity could either bolster or hinder investment. The ongoing institutional pivot towards Ethereum has the potential to reshape the landscape of cryptocurrency investing significantly. With more traditional financial entities entering the fray, the perception of digital assets is shifting from speculative investments to legitimate financial instruments. Over the next few weeks, the actions of institutional players will be critical in determining Ethereum's trajectory, potentially influencing its long-term viability and integration into mainstream finance. The surge in Ethereum ETF inflows marks a significant milestone, reflecting a broader trend of growing institutional interest in cryptocurrencies. Over recent weeks, Ethereum ETFs have seen an impressive total of $2.85 billion in inflows, culminating in record-breaking figures for the sector. This dramatic uptick can be attributed to a combination of regulatory clarity and favorable market conditions, which have created an environment ripe for investment. In particular, the U.S. Office of the Comptroller of the Currency has encouraged banks to forge partnerships with stablecoin issuers, enhancing the legitimacy and accessibility of digital assets. Furthermore, the approval of the European Markets in Crypto Assets Regulation has provided additional regulatory support, facilitating smoother market operations. The recent divestment of Donald Trump Jr. from a crypto mining firm, along with Bailey Gifford's introduction of an on-chain fund, underscores a growing trend toward institutional adoption within the cryptocurrency landscape. Historical data indicates that as institutional capital increasingly flows into Ethereum, we could witness a transformative shift in the investment paradigm, potentially positioning Ethereum as the primary asset for institutional investors, a space traditionally dominated by Bitcoin. This evolving landscape not only highlights the maturing of the cryptocurrency market, but also reflects a broader acceptance of digital assets among major financial players. As institutions continue to navigate this space, the implications for market dynamics could be profound. The influx of institutional investment may lead to increased price stability and legitimacy for Ethereum, encouraging further participation. Looking ahead, as regulatory frameworks solidify and institutional interest deepens, Ethereum's role in institutional portfolios may solidify, paving the way for a new era of digital finance that prioritizes innovation and compliance while reshaping investment strategies in the months to come. The significance of this $1 billion inflow into Ethereum ETFs cannot be overstated. This influx highlights a pivotal shift in institutional investment strategies, as Ethereum is now taking precedence over Bitcoin, the long-standing leader in the cryptocurrency space. This transition is largely driven by Ethereum's advanced capabilities in smart contracts, which enable programmable transactions, and its dominance in the decentralized finance (DeFi) sector, where it serves as the backbone for numerous financial applications. Institutional investors are increasingly viewing Ethereum as a yield-generating asset, which could lead to an acceleration in its adoption across various sectors, including enterprise blockchain solutions and stablecoin infrastructures. The implications of this event are profound. Standard Chartered has raised its year-end price target for Ethereum to $7,500, almost double its previous estimate of $3,800. This optimistic outlook suggests that investors could see substantial returns if this momentum continues. Moreover, the inflow signals robust institutional demand for Ethereum, thereby enhancing its status within the broader cryptocurrency ecosystem. This growing interest from institutional investors is expected to attract more retail investors eager to capitalize on this burgeoning trend, further solidifying Ethereum's position in the market. Additionally, the increasing institutional focus on Ethereum reflects a broader trend in the financial landscape, where digital assets are becoming more mainstream. As more financial institutions and corporations begin to embrace cryptocurrency, Ethereum's unique features, such as scalability and versatility, position it as a favorable option for investment. The rise of DeFi applications built on Ethereum also highlights its potential to disrupt traditional financial systems, making it an attractive asset for forward-thinking investors. Looking ahead, sustained interest in Ethereum could lead to increased regulatory scrutiny, as authorities seek to understand and manage the risks associated with these digital assets. However, if the current trajectory continues, Ethereum could solidify its place not only as a competitor to Bitcoin, but as a cornerstone of the future financial ecosystem. As Ethereum's ecosystem expands, its influence is likely to reshape investment strategies, ushering in a new era where digital assets play a central role in global finance. Investors should prepare for a transformative period in the cryptocurrency landscape, with Ethereum poised to lead the charge. On Monday, June 22, 2026, a record-breaking influx of over $1 billion was recorded in Ethereum ETFs, setting a new high for single-day investments in cryptocurrency. This remarkable surge in Ethereum ETF inflows underscores a growing trend among institutional investors, who are increasingly viewing Ethereum as a viable alternative to Bitcoin. Historically, Bitcoin has dominated the cryptocurrency market, but Ethereum's unique capabilities, including smart contracts and decentralized applications, have made it an attractive option. The rise in Ethereum's popularity comes amid a broader rally in the cryptocurrency market, where altcoin prices are also experiencing significant gains. Solana saw a notable increase of 9%, while Dogecoin surged by 8%, reflecting a renewed enthusiasm among investors for these digital assets. Additionally, Bitcoin made headlines by briefly reaching a staggering price of $122,800, marking it as a pivotal moment in its ongoing volatility. The total cryptocurrency market capitalization soared to approximately $4.13 trillion, reflecting a daily gain of 2.8% and an impressive 11.1% increase over the past week. This uptick indicates a robust recovery from previous market corrections, suggesting that investor confidence is returning. The Fear and Greed Index, which gauges market sentiment, rose to 63, signaling a transition from a neutral perspective into cautious optimism among traders. Moreover, Perpetual's open interest climbed to $949 billion, reflecting a staggering 19.7% increase over the last 24 hours. This metric indicates heightened trading activity and interest in leveraged positions, suggesting that traders are positioning themselves for further price movements. Average funding rates turned positive at plus 0.0057%, indicating that long positions are becoming more favorable in the current market climate. The unprecedented surge in ETF inflows highlights the growing institutional interest in Ethereum, which is now increasingly perceived as a more attractive investment compared to Bitcoin. These developments could reshape the cryptocurrency landscape as more institutional capital flows into Ethereum-based products. As regulatory clarity improves and more financial products emerge, Ethereum's role in the cryptocurrency ecosystem may continue to evolve. Analysts predict that if this momentum persists, Ethereum could solidify its position as a leading asset class, potentially attracting even more investment in the coming months, paving the way for a new era in digital finance. As Ethereum captures institutional interest, how will this influence the crypto landscape moving forward? Share your predictions in the comments below, and don't forget to subscribe for daily deep dives into the world of cryptocurrency.